Hello fellow investors and welcome to Sylle Invest, where we bring knowledge to investing. Will Newlox stock more than double in this year alone? Today we'll talk about my price targets for the company and what numbers I use to reach those conclusions. Remember, I am not a financial advisor and you should do your own research before investing. Before we talk about the price targets, I'll briefly explain the company Newlox Gold Ventures. Newlox is an ESG gold producer that recover gold from artisanal mining tailings. They extract over 90% of the gold, whereas artisanal mining practices are at best 40%. They do environmental remediation by removing toxic mercury from the tailings they process. There is no gold exploration needed, which is very, very expensive. And the facilities are low cost, high margin and built quickly in less than 6 months. So let's move on to the price targets and see what I have in store for you today. Here we go. And I'm actually going to jump straight to the bullet. Up here we have my projections and my bear, base and bull case. Let's see, I can put it over here. As you can see, I have, if we start from the top there with outstanding shares, we have currently 190 million outstanding shares, fully diluted, of course. I expect it to increase very little. I don't think they need much dilution. Then we have the earnings per share down below, which is calculated by some measures. Moving on to the bear target and the base and bull, we have a PE ratio of 15, 30, and 50 to calculate my my numbers. And before we go into the numbers themselves, so why 15, 30, and 50? The base case is 30. That's because Morningstar, if you look at gold producers, there are of course gold exploratory companies that do gold exploration, but it's risky because you can use a lot of money trying to find gold. So it's not guaranteed that you find it. So that actually brings the PE very low for these companies. But if you look at gold producers that don't do this exploration part, according to Morningstar, the Canadian typical PE ratio is 28.8. And Newlox is very, very special because they also have this ESG focus, which I believe will give them actually a very big premium. So I'm going to be bold and increase that 28.8 typical number to 30. And going with this, by the end of this year, I expect it to be $1. All of these numbers are US dollars. That's an increase of 178% from the current value, which by the time of filming is 36 cents. The year after that, I expect it to be 2.01. Later we have 4.18, 6.68, and at 2025, the prediction is 9.07. The 2021 prediction is a little special because I'm using PE ratio and their facilities will be like at full scale by the end of this year. Now Boston has been pushed a little, so most likely very, very early done next year. So the production will be like very much at big scale at the very least by the end of this year. So the PE ratio makes more sense starting next year when we do have some production and we do have some numbers to look at. So for my 2021 prediction, it's basically half. I would say, knowing that the price target is at 2, I would say I could definitely buy into a stock, knowing that, yeah, I can expect a 100% increase in 1 year. That's a big gain. So yeah, I would say that's some would call that bearish, some would call that bullish. I would say perhaps a little bearish, but who knows? I would say, I would definitely buy into stock, knowing that the price target for the coming year would be double. Okay, so moving on to my projection notes, because we can't count everything. So let's go through this and see what I have to say, starting with Corona is a bad thing. It can affect the project timelines. The construction and the production can be pushed. We also have political threats in Latin America that can obstruct expansion. because it's not like in Sweden or in Canada, it's very politically stable. That's not the case in Latin America. They are working and doing their absolute best, though, to make sure that the projects they take onto themselves are safe from these threats. And then moving on to number 3 here, I'm not counting, let's do it like this, I'm not counting the interest and amortization. I simply have not gone deep, heads down into their financials. I don't know what debts they have and what sort of fees they have, their interest. They did release some press releases earlier, like a few years ago, when they claimed they were debt-free. I don't know if they've taken any debt from that point on, or if there's been some equity, like some dilution. And I think that has been their primary financial part. They want to make loans like when plant 1 and 2 is finished. That's when they want to take loans, because then they have good terms. So I don't know if they actually have loans right now. And if they do, I don't expect them to be big. Moving on, we can see here, I expect Newlox to execute according to plans. If you look at the numbers or the projections there above. I would say their plan is not that bullish. It's not it's not impossible to reach. I can definitely see a scenario when they overperform based on what they claim they are going to do. They're going to do 2 facilities each, or 2 plants each year. And with their high margins and the interest from other like artisanal miners to work with them, I can see this being larger, but I can also see them wanting to hold this back to make, a controlled expansion. You don't want it to be uncontrolled, and then, many bad things can happen. So they have potential for more. I don't know if they will proceed faster, though. So we'll see. Plus and minus. Can go either way. Moving on, we can see the overhead costs. It's actually over here. I will go to the measures later, but I do have an overhead cost of 15%, because we have no, this is how much things will cost. This is how much we expect things to cost at a certain time. So I will simply have to do a rough calculation of a 15% overhead. Can be more, can be less. We don't know. Another plus minus is the gold price, and the gold price right now is at around $1,800 per troy ounce. This gold price may vary, and from my research I've done, the gold price is actually estimated to go up quite substantially in the near term. So I would say this is mainly a positive thing, but you never know, so it's going to be a plus minus one. Moving on, we can see there's a lot of positive things here. The first one is they have a few models that they work with. They currently have like a 50-50 model where they take the gross profit and they split it with artisanal miners. And the split is actually pretty neat for the artisanal miners, because they do get more money with this model with Newlox than if they would do it themselves. Not only do they get more money this way, they also get no mercury, so that it's less hazardous. So their health is, kept at a good. They are not killing themselves with mercury at the very least, and they also work with better equipment, so they don't have to tear their body. So it's so many advantages. And I can see this model becoming more beneficial for Newlox in the future. I am very happy that the artisanal miners get such a good deal. I truly am. But with and also if the gold recovery becomes better with Newlox future solutions, I can see this becoming a 45-55 model or something different. But this is, I would say, it's a bearish case to expect them to continue this model for eternity. But my model, as of right now, do expect that. So that's a bearish case for me, or a conservative case for me, I guess I could say. So yeah, I expect this to be better. Moving on, we have the OAR licensing. It's actually their technique, their gold leaching technique, and it's amazing. It's non-toxic, and it has so many advantages. They're currently at stage 2 or phase 2, no matter what you want to call it, and the results look really, really good. I expect them, when it's done, and they implement it themselves, I expect them to be able to license this to countries. Like I said over here with the political threat, there are places where Newlox don't want to expand. In these places, they can simply license their technology and gain money from that. That's one way of expanding. And I'm not counting any licensing fees. Moving on, we have also the OAR improvements, because right now it's a 90% gold recovery with it. The recent testings show a 95% gold recovery at Costa Rica ambient temperature and a 100% gold recovery at 80 degrees. And that's not too much. So I definitely see this improving in the future. My model right now, though, only count 90%. Moving on here, there will also be some silver recovery, and it's expected that the Boston facility is going to have a substantial amount of silver recovered. I do not count these. I also do not count for subsidies. I expect there to be subsidies, like tax cuts, anything, because I'm just going to skip over here. The taxes in Costa Rica and Brazil, these are the corporate taxes. Huge! It's like huge numbers. I expect them to have some sort of tax cut in the future. And also other advantages, but I'm not counting them here. Also not counting any grants, which I also expect them to get. They've had grants from the government in the future, which mean the government supports them, and I expect them to get some more. And this one is perhaps a little more speculative. The assay revenue and carbon credits. So there's like assay labs where they can, from my understanding, is where you can check like dirt to see, the precious metal content to analyze if the ground is good. They have one in Costa Rica. They're going to build one in Brazil, and from my understanding is that they might even start analyzing other companies' ground to be able to, because right now it's a problem with there are so few assays, so you have to send your dirt somewhere and it takes a long time to get answers. So they will be able to sell this service to other companies. I did not count that revenue at all. And I'm also not counting carbon credits, as it's more speculative. The CEO was contacted recently about them. He has a friend who does carbon credits, and they're currently looking into if that is something they can earn money from. But since it's speculative, also not counting it. So as you can see on these notes, there are some bads, of course, some bads. Some we don't know. The gold I would expect to be positive in the future. And then we have all of these good things that I expect many of these things to come true. But since they haven't, I will not count them. I like to have like somewhat conservative approaches with my projections. I don't want to make people be like super happy and like, oh, look, these numbers are so high. And then all of a sudden reality hits and it's like, oh no, it was only like wish, it was dreams. So conservative on that part. So moving on, we can see some here. Gold prices today, 1800. Here's a troy ounce. Here are the taxes. Here are the overhead. This is actually updated. So when the gold price is increased or decreased, so will the price. We have analysts saying that the gold price by the end of this year might be like between 2,100 and 2,500 because of the Basel III restrictions on banks. That's an entire history on its own. But let's say it reaches $2,100 per troy ounce. All of a sudden, my price target increased to by like 20% more, and this one increased even more, and this one. So this one, when this increases, and many expect it to increase, this price is going to be much, much, much larger. But I'm going to keep it where it is today. And here on the overhead, a note here. So the overhead. Plants that enter production mid-year have more than 15% overhead in the first year. I would say that's because they do. The plant does not work very much, and therefore I do the overhead on like on the gross. I think it's on the gross profit down here. But since they don't have much gross profit on the first year, that would mean like the overhead would be really small. I don't think that makes any sense. So I've increased the overhead for the first year to make it more realistic. Here we have in dollars the financial information. I have the EBITDA for the years and the net profit. So this year, like I mentioned, I don't expect there to be much profit because of basically they're going to ramp up, so they're going to have the production starting like next year. So the next year is going to be like these facilities are going to pump like the entire year. So next year is going to be great, and the coming years after that's going to be even greater. I do have a depreciation here where I count that each project is going to live for 10 years. That might be pretty long. If that is long, then this, and we decrease it to 5 years, and these numbers should be much more. But 10 years, it's just it's like a wild card. I hope to get some more numbers on these from Ryan in the future. Moving on to the plants and how they work. So here we can see the first plant and how I calculate these things. So we have the work days. They work 6 days a week, which would mean 313 days a year. Here is the daily throughput in ton. Here is the gold content per ton, and the gold recovery rate, and then how much gold we've recovered. The interesting thing here is that they claim that this plant 1 at full scale should be able to produce 6,500 ounces of gold. And these are their official numbers, and they match really well. And I love that. I love when the numbers match. So perfect match. This one we can increase. When we increase this, the gold recovery will increase as well. So these are very simple things to change. Looking at this, we have the revenue. Let's actually look at next year, because this year it's not going to be too much. So next year we have revenue of $11 million. Then we have some royalty. For those of you who don't know, they do have royalties. They have had early investors who helped them. It was one investor who is going to have a big chunk of their future gains because they paid like $1 million at 2017 when they were really, really, really small. Without that money, they would not be here today. So these royalties are not uncalled for. So the royalty for plant 1 is that until the project is paid, it's 21% royalty of the revenue. When the project is paid, and the capex that they need to pay back $1,025,000. When they do, the royalty is going to decrease to 12.5% for the rest of the lifetime of this project. So yeah, these are the royalties for that. The costs here, because they buy these tailings. So they buy tailings and they process it, and from my understanding is that it costs $600 per like produced ounce of gold. So these are the costs, and then from all of this we have the gross margin, and then from the gross margin we also have some overhead, because I expect there to be some management fees, etc., etc. And this is the 15% we had here above. And it's just because if we don't have, I expect it to be some like, and I think also around 1 million overhead for one facility. Okay, that might be pretty high, pretty low, depending on, how much work needs to be done there. I would say this is perhaps a little high, but yeah, I mean, $1 million, whatever. And then we get the EBITDA from that. I look forward to having these numbers more clarified by the CEO. These are just based on the numbers we have, and the numbers we don't have, we have to guess our way there. And I try to guess with somewhat conservative numbers to see where we land. So yeah, EBITDA about 5 million, and then we do the depreciation, which is like this number, and then it's like a 10-year period, so 10% for 10 years. Then we have the tax on that, and then we have the net profit. It's the first plant is basically we buy tailings, we process these tailings, and then we get a gross margin. So here's the revenue, take some royalty out of that, and we also take the cost for processing everything. Boom, gross margin. Do some overhead, have EBITDA, a little depreciation with the tax, and boom, you have a net profit. So here's the net profit. It's not super advanced. I try to make it as simple as possible for you to be able to, follow along and see that these numbers make sense. So this is actually the other model that they have. It's the 50-50 model. It's the Boston plant. And here we can see I expect them to have, it's like, how many days of full production do I expect them to have? This one, the Boston plant is supposed to be finished like early next year. I would say January, February. It's going to be finished in September. It's going to be in production in September this year, but it's going to be at full scale around they say winter, this winter, but it is hinted that it's like January, February next year. And while since they will start production here in September, they will scale up all the way into like January, February, until it's at full scale. Full scale would mean these numbers. So this year, I expect around 26 days worth of full production. That's not much. They will recover 1,700 ounces of gold, and this is like also a conservative estimate because I don't want to overhype things. Next year, since they will still have like 1 or 2 months still ramping up, I remove some days here, like I don't know, 20, 30, around 25. And then so we're gonna have this much gold recovery that year, and then afterwards it's gonna be 20,380, also in line with what the company has said. Now this model is actually pretty interesting, okay? So join me here. We have the revenue as usual. You have this gold recovered, right? So you take all of this gold recovered and you multiply with the gold price over there, and boom, you have a revenue. I forgot to mention that before, but that's how it is. Pretty simple. Then you have the royalty fee. This royalty fee is a little interesting because it's 6.75%. And it's going to, from what I have read from their, they have these, there's this website where they have listed how this royalty work. It's a little complicated, and I would like to have Ryan give some clarification. He has mentioned 6.75% royalty, but there is a clausule that once the project is paid, it will go back to 10%. And the capex here is 2 million. So until it's paid off, it's going to be this, and when it's paid off, it's going to be a 10% royalty for the rest of this lifetime. So yeah, this is a royalty. Going down to the costs. Here's the thing. The artisanal miners is going to do all the mining. It's not going to cost Newlox anything. But the production costs. So the thing is, the deal says that the production cost that Newlox have in this deal, like so that the miners or the artisanal miners, they bring the dirt or the earth to these plants where Newlox will process it. All of these costs are first going to be paid before the 50-50 split. And the 50-50 split is simply you take the gross margin and you split it. So royalty disappears first, then you have these costs, boom, disappears. Now you have a total gross margin, and then they take this gross margin and they split it. So Newlox get around 14 million, and the same goes for the artisanal miners. And as I mentioned, this is a good deal for the miners, and I would say also a good deal for Newlox, even though this model is not as profitable as this one above. It's still a good deal. Looking at the overhead, we still have the 15% as mentioned before. The EBITDA then gets around 12 million. We have some depreciation, the same model as before. We have some tax, and the tax is huge. Oh, it's like, 30%. Holy damn. And then we come to a net profit of 8.3 million. Here I want to, and later on, when it's actually full scale, it's going to be like 8.8 with all costs and everything included. Here's one thing I want to point out. Ryan actually said this. Let me read this. The net profit for Plant 2, the Boston project, is estimated to be, the net profit is estimated to be $12 million a year using gold price of $1,800 per ounce and a gold recovery rate of 80%. We have 90% here and the same gold price. I get 8.8 million. He gets 12 million. So, I mean, either these overheads are like, perhaps the costs are much lower, perhaps the overhead is much lower, but they get a much bigger number than me, and I mean that makes me happy. That means I'm giving the low numbers and not the big numbers. So what we're seeing here might actually be very conservative numbers, especially with lower tax, perhaps lower overhead, perhaps lower cost. I think royalty is going to be the same. It should be 10. We'll see. Perhaps he knows something. Obviously, I do not. He's a CEO. I am a simple investor, and I do research. Yeah, I'm very bullish on this. And then we move on. The thing is, the Plan 2, Boston, The 50/50 model, they haven't announced the model for the future plants, but I'm assuming every plant is going to be Boston. Every single plant is going to have the 50/50 model, as I mentioned above. That is cool. I would say that's conservative because I don't think this model is as profitable as it can be for Newlox. It is very good for the artisanal miners. It is good for Newlox. Like I said, I'm very happy for the artisanal miners. They're having a really rough time, and the conditions they work in really bad conditions, and they take some really strong health risks with the mercury. So I guess this is a way of making, like, it's really the ESG part of how they do things. So I guess they don't want to take, like, they want to squeeze every penny out of them. So, you know, both still get a good deal. And I think both parties are very happy with this. And this is the model I'm using for every facility from then. And yeah, so it's basically copy paste on all of those. The only thing that's different is when they start. I would say the plant 3 in Brazil should start producing mid 22. That would be like 52 days of full production. And the plant 4 is gonna be like finished end of year 2022. So I'm not expecting like anything here. And it's gonna be like half a year of ramp up, so we're gonna lose some days. And so every plant here is like half a year forward, half a year forward, half a year forward with the same model. And another interesting thing is that these models, they're actually, I've set them to be 20,000 like gold recovered per year. There has been big indications that these Brazil plants are gonna be much bigger. But I am going to stay with 20,000 until I know more, because as I mentioned, I want to be on the lower end and not on the higher end. So with all of these numbers, all of these, I would still say conservative numbers. I will adjust them when we have more information from Ryan. We're not counting any of these goodies. Of course, some risk here. And the goal, I would say, would be will increase, but don't take my word on it. And I still end up with these numbers. The only thing that I am... this one here might be a little lower. Newlox is not as big and famous right now, which means since people haven't realized their potential, I would say their PE as of right now that's why they're so cheap right now. That's why they're 36 cents. People don't know about them. People don't know what they do. People don't know about their plans, what they have done, and like their potential. As soon as the world knows, I would expect the PE to rise to 30. That's my base case. Since they're ESG, I would say this one could be much higher, but I'm gonna put the base at 30. So this one might be a little less than $1 by the end of the year, depending on how well known Newlox will be. But here and onwards, I would say they should be pretty well known, and I'm more comfortable with these numbers, I'd say. So at least a $2 there at the end of 2022. That's an increase of 458% of today's value. Yeah, that is my take on this. That is my take on Newlox, and that is why I invest in this company. I believe in that. I believe what they do. Great ESG company, and they really think about the artisanal miners. They have a bright future ahead of themselves. I really wish to them the best in the future, and I also make these videos to show the world what they do. And later this year, their technology is their OER technology. It is revolutionary for the health of this world and also the miners. And I'm looking forward to make a video of that. And I do hope they license it in the future. And that's it from me for today. I hope you found this video helpful. Please like and share if you like the video, and don't forget to subscribe. If you want to support my work, please consider becoming a patron or donating. These videos take very much time to prepare, and your support is really appreciated. Thank you for watching and have a good one.